This LOS is describe alternative formats of balance sheet presentation. Okay, here's an example of two balance sheets. On the left-hand side we have SAP, and the right-hand side we have Apple. And this is just from the CFA Level 1 text. SAP reports according to IFRS, and Apple is reporting according to US GAAP. And so the first thing that we can see is that the main balance sheet elements are here. We have our assets, we have our liabilities, and we have our equity. And assets equals liabilities plus equity. So these balance sheets are consolidated, and they're showing just the main categories or headings. So we start under the assets with current assets. We have non-current assets, gives us our total assets. Current liabilities, non-current liabilities, gives us our total liabilities, and then our total equity. And you know there's more components of equity. So these are just very abbreviated balance sheets. Of course, for equity, we know there's paid in capital, there's retained earnings, there's other comprehensive income, things that we'll study in more detail at looking at other LOSs. Okay. The last thing to note here is that a balance sheet is as at a certain date. So for SAP on the left-hand side, the balance sheet is as at the 31st December 2008, then as at 31st December 2009, where Apple is using a fiscal year end, and they have a balance sheet date of the 26th September 2009. An alternative presentation of the balance sheet is the liquidity-based presentation. A liquidity-based presentation, rather than a current non-current presentation, is used when such a presentation provides information that is reliable and more relevant. With a liquidity-based presentation, all assets and liabilities are presented broadly in order of liquidity. So the CFA Level 1 text has an example of a Chinese bank, and they show you that all the assets, they're not classified as current or non-current, they're just listed in order of with regards to liquidity. And that's the last slide for this LOS. Thank you.